Hey everyone, this is Jason from Modern Money Method, and a lot of you have been asking that I make a video on how to make money when things are going down. And so I wanted to show you something here. A lot of you remember my video from last November when I was telling you that we were approaching a stock market high. A number of indicators had pointed to the fact that we were getting to the very tail end. So what I'm showing here is the NASDAQ composite. This is current day. It's at 10,981 in the past year. It's down almost 4,000 points. But when I was giving the warning in November, you can see that it doesn't show on this year chart, but it was like 16,200. And you had a couple opportunities here in November to get out. And so I appreciate everyone who reached out to me, who took my advice and got their positions out of stocks in their large 401ks and investment accounts. And I told them there'd be a time to buy. So a lot of times people think there's a one answer that fits all for everyone. There isn't, because it depends on your money, your time frame, your use and need for that money. But I could basically tell everyone to sell in November. Now, depending on other factors, not everybody may want to be a seller at this point. So I told everybody in March, you have one last opportunity here to get out. At that point, you're only down about 10 to 15% on your money. These are what are called bear market rallies right here. And they feel really strong, and like everything has changed, and the media tells you to buy the dip and that things are looking better. And a normal bear market has anywhere between 3 and 8 of these rallies where they're quite dramatic, and sometimes they last for a good period of time, making you think that the bottom is in for the losses in stocks. There was a small one right here. I think that was about an 8%er. This was a pretty good one. This one, now I'm just talking about the NASDAQ today. The S&P is a different story. It basically, the NASDAQ amplifies what the S&P does by 150%. So if the S&P was to drop 10%, the NASDAQ drops 15%. Just an example. Not always, but it's a relationship that is played out over time. So you can see here we had a 15% bear market rally, and then a very steep precipitous decline. And then another one of these little 8 to 10% pops. And even these trick you, because they go on for a couple weeks and you think things are good. And we fell off the cliff again. Now this was a strong one. A lot of people got sucked into thinking everything was okay from June into the middle of August, because look at this. We got down to 10,600 on the NASDAQ and all the way up to over 13,000. So that was like a 25% rally. Isn't that just crazy? In the middle of a bear market. So we've had like 3 of these. There's a good chance that we will have 3 to 4 more before we hit the bottom. The way they make you think you're at the bottom, if you notice here, this chart only shows 10,000 on the bottom. If they were to show 8 or 6,000, then you would see a different picture. But by drawing this line here at 10,000, they make you think that that is the bottom. Now, when it has this steep of a decline and goes down, 7, 8, 9 days out of 10, 11 trading days, there is going to be a reversal. So it's pretty easy to see that with this precipitous decline, especially since right here, September 12th, we're only talking 2 weeks ago, how much we have dropped almost every day. So we're gonna rally here. Can't go down every single day. Just can't. And so there's going to be a rally here in the NASDAQ from, I think it hit the low yesterday of like 10,750 or 800 or something. I wouldn't be surprised if it's a 10%, possibly more. So I just wanted to share the NASDAQ. And you're like, okay, Jason, thanks. You showed us it's gone down. We liquidated our positions. We went to cash, but we're not making money on the down move. Yes, you can make money on the down move. And it's easier than you think. You don't have to short a stock and run the risk of an individual stock doubling, tripling, tenfolding overnight for some insane reason. some companies buying them out and overpaying for them. They have invented some ETFs. One that is specific to the NASDAQ is the SQQ. And so what this is ProShares Ultra Short of the NASDAQ. The QQQ is a symbol for the NASDAQ. And what I want to show you is what we have here is over that same time frame that you just saw what the NASDAQ did. Let's just go to the 1 month, actually. We'll go a whole year. So you can see how the NASDAQ has declined over the past month quite significantly. The SQQ is up 27% in that time frame. So it runs the opposite. Right here on September 12th, you could get it for 40. It peaked out. I missed the top. I think it was 58 and something. I sold at 54.90, and but I bought back here in the low 30s. So this is you're shorting the NASDAQ. Now the risk is the NASDAQ rallies 10, 20, 30, 40%, and you are going to take a 40, 50, 60% hit on your funds here. So this is not something to play around with if you don't know what you're doing. But it is a way. If you're still invested in the market, maybe you can't get out of the stocks that you're in, then you can hedge your portfolio by buying shorts. That means you profit when the stock market falls. So, and I want to show you here just a few of my trades that I made. And we have right here, this is in my trade account. You can see that I bought 50 shares of SQQQ back on 8/15 for 33.5. And when I bought those, I was playing it for a short trade. And you can see it was only a week later, and I sold more than half my position at only 39. Oh well, it seemed like a good deal. I made almost 20% of my money in a week. And then I sold the last 20 shares of the SQQ at 50. So on this trade here, 33 to 50, I made 50% on my money. So almost exactly 1 month, from August 15th to 9/16. If you would have bought shorts on the NASDAQ, you could have bought them at 33 and change and then sold them at 50. Now, they did get as high as 58 here just a day or two ago. I thought the rally would come a little sooner and than it has in the market. I thought it was going to rally in here. But so this is something to watch for. I would say if there's an 8 to 10% bounce in the NASDAQ, I said 1 year gives you a good perspective of what's going on. So we're down 16.2. I mean, we're down 35% in the NASDAQ from the peak to the recent low. We're probably going to have another rally. I don't think we'll eclipse this high. Do you see how the highs are lower? This was a high here. This was one where this was in December, January. This is when the S&P peaked out. See how this high is lower than that high, which is lower than that high, and this high is lower than that high. There is a good chance that we rally close to this peak, at least halfway. So we're talking like 13.2 down to 10.6. What is that? That's 2,600. So 1,300 on top of 10.6 is 11.9. Good chance that we come back to 11.9, maybe 12,000 on the NASDAQ here. But I believe there's a lot more downside risk. So that is one of the ways, guys, that you can profit by shorting the stock market. And I wanted to share that with you. And thanks so much for stopping in today for my short video about how to profit in a market that's declining.